What's up, guys? It's Natasha Barbella, the Moneyista, 20 years in audit, accounting, and tax, 13, and yours truly, the Internal Revenue Service in the Large Business and International Division, examining large entities that report 10 million or more and gross receipts and or assets. So I want to talk about a CPA versus a tax professional, right? A CPA is a certified public accountant. That does not mean that they are a tax specialist, kind of like your general practitioner, right? Your doctor. If you have an issue with a special part of your body, they have to refer you to a specialist, right? And you have to go to the specialist to be diagnosed, right? So your general practitioner can't do everything. So your CPA is kind of like the same, right? Much like attorneys. You have real estate attorneys, you have criminal lawyers, you have civil lawyers who specialize in corporate, things of that nature. So accountancy is kind of like the same way. Don't assume because you say CPA or that you're looking for a CPA that you're going to get a tax specialist or a tax professional, right? A lot of them are not qualified. A lot of them are just preparers, which is basically data entry, right? And so you expect a lot from them in terms of your tax refund, but the truth is you're placing the burden on the wrong person, right? The burden belongs on you, the taxpayer. If you want to reduce your tax liability, it's up to you, okay? And so I want to read an email that I got from one of my students, and this is a perfect example of a CPA not necessarily being a tax specialist. And this is in regards to real estate, right? So he says, I think this is the dilemma. It's like everyone has his own version / interpretation of the law. One says yes, and the other says no. I did raise this concern to the new CPA as soon as I saw your intro webinar. And if you guys want to join, go ahead and there'll be a link in the description box to register for my free live training. The next one will be January 31st, 8 p.m. Eastern Daylight Time. Okay, so, and she outright disagreed with it. Okay, especially the bonus depreciation on your rental property. Of course, without understanding the premise behind what you're saying about real estate. So you can look this up. It's on the IRS website. Okay, bonus depreciation normally is at 50%. So what is bonus depreciation? It basically says you get to take certain accelerated depreciation, which is a fancy word for expense, right? You get to take the full cost of the asset that you place in service, because normally you would have to take the useful life of the asset, divide the cost, right, into the useful life and take that portion as an expense every year. But bonus depreciation says you can take the full cost in the first year you place the asset in service. So with regards to real estate, because it does apply to businesses, machinery, equipment, things of that nature. With regards to real estate, you have the structure of your property, which is for residential is 27 and a half years. For commercials, 39 years. And so I'm going to go with the residential example. You get your 27 and a half years, so you get depreciation each year, right? Which is basically the purchase price of the property minus your land value, because land is not depreciable. And then you take that item, that number, and you divide it by 27 and a half. And that is the portion you will get every year, okay? Pretty simple math. All right. Now, what bonus depreciation says is, hey, we know that there are items within your rental, because it's an asset placed in service, right? It's not a primary residence anymore, that are depreciable under a shorter lifespan, right? So bonus depreciation applies to items that have a lifespan of under 20 years. So they break it up. Most firms that assist in bonus depreciation break it up into 5 and 15-year property. So what are things like 5-year property when it comes to rentals? Your appliances, your removable flooring, your appliance wiring, your kitchen cabinets, countertops, things of that nature, blinds, ceiling fans, anything, carpets, anything you use in a rental, right, that has a depreciable life or a useful life, right? Because sometimes the terms are interchangeable. If you're an accountant, has a useful life of less than 27 and a half years. And then they break it up into 15-year property. Things like your driveway, your fencing, your walks, things of that nature. And what they do is they allocate a cost, right? So prior to the enactment of the Tax Cuts and Jobs Act, new builders were the only ones that were eligible for bonus depreciation because all of their items were new, right? Brand spanking new construction, right? what the Tax Cuts and Jobs Act did, it says, hey, we're going to allow it for used property too, which means if you're an investor and you purchase property, technically the items in there are used because they were in there before you purchased, right? But the Tax Cuts and Jobs Act says, hey, we know that these are used items, but they're new to you. So we're going to allow you to take the accelerated depreciation, which is basically a fancy word for expense, right? For these items, your kitchen cabinets, countertops, all this good stuff, your driveway, your walks, your fencing. We're going to allocate a cost, right? You don't actually have to do renovations, but we're going to allocate a cost because it's still depreciable. And we're going to allow you to take 100% of that cost in the first year you place the asset in service. Okay, now bonus depreciation starts to phase out in 2023. So from September 17th to 2017 to December 31st of 2022, you got 100%. 2023, you get 80%. So I'll give you an example. I purchased the property. I placed it in service right away. In fact, I purchased it with renters in it. It was right away ready, right? Placed in service means the asset is ready and available for use. You don't actually have to have tenants in there, but it has to be available and ready for tenants, okay? And so I got my regular depreciation, which is the purchase price minus the land value, and that's my depreciable basis, divided by 27 and a half years because it's residential property. And then I have what we call a cost segregation study performed, right? We don't do that as taxpayers, we outsource that, okay? There are firms that do that. And we have a specific firm in the Tax Strategist Mastermind that we work with and our students work with. And they allocate a cost to my cabinets, my appliance wiring, my appliances, all that good stuff, flooring, anything that's in the property. And I got an additional cost for my 5-year items of $83,000. And then I got my 15-year property, right? A cost allocated. Again, I did not pay for it. It's just a cost allocated because I did purchase it. It is in service. They're giving me that expense, that cost as an expense because it is an asset placed in service. It's not my primary residence, okay? And then they gave me $35,000. So that's about under $120,000 in an additional expense that I get to take in the first year that the asset was placed in service. In this case, 2022, in addition to my regular depreciation for the structure. Okay, most people don't understand how bonus depreciation works. You do need a cost segregation study. It cannot be performed on any property that you live in unless it's a multifamily and you live in one unit and you rent out the other units. And in that case, you will only get the cost allocated to these items as an expense for the units that you have rented, not the unit that you live in. It's only business use. The tax code only favors business and business-like activity like real estate. Okay, now this applies to a lot of things like vehicles for business, machinery and equipment for your business, but I just want to talk about real estate because it has the highest impact. Okay, so I just want you guys to know everything is available. You can Google bonus depreciation. I've had students tell me that their CPA didn't know what bonus depreciation was. That's because a CPA is a certified public accountant. They are not a tax strategist, guys. Shout out to all the CPAs. You guys took that 4-part exam. It was super duper hard. And it comprises of a lot of parts of accountancy, guys. Accountancy is a huge umbrella. You have forensics accountants, you have cost accountants, you have many different fields. You have accountants that specialize in trucking and only know trucking. You have accountants that specialize in, restaurants and only know restaurant industries, right? That's their specialty. So I just want you guys to have some perspective when you're getting information from your accountants. And a lot of times they'll tell you no because 1, they don't know it. 2, they do know it, but they know that there's a lot that comes with it that you're not going to keep up with as the taxpayer. And that's why I started the Tax Strategist Mastermind so you guys can get a huge benefit from actually knowing the tax code and not relying on somebody who is a CPA but necessarily is not a tax professional, right? Not specializing in tax. They may know some of it. They may graze a little bit here and there, but as far as being a strategist and a planner and knowing the tax code and giving you the information, a lot of them are not equipped. Tax advisors are extremely expensive. Okay, so the average person doesn't have one. So if you want to join the Tax Strategist Mastermind or the actual free live training, I'll drop the link in the caption and the description box below. And I hope this was insightful for many of you. Bonus depreciation is huge and it's phasing out. So yeah, you'll only get 80% this year. So in my example where I gave the 83,000 and the 35,000 for 5 and 15-year property, if I had purchased the asset or placed it in service this year, I would only get 80% of those numbers rather than 100%. Okay, so it's declining. Next year it'll be 60%, then 40%, then 20%, then zero. It's not coming back at all. At least that's what the omnibus tax package passed. They didn't touch it. They didn't alter it. They didn't extend it. Take advantage of it. And I hope to see you guys in the mastermind. Bye. Mwah.